Joining us now is Eddie Ghabour. He's the co-owner of Key Advisors Group. Eddie, it's good to have you with us. Markets gaining this morning. The Dow up about 200 points, but not nearly recovering all of their losses on Friday. If you're an investor, what is going through your mind this Monday morning as President Trump has at least backed off the gas a little bit when it comes to heating up the trade war?
Well, I think it was a pleasant surprise to market watchers this morning because going into last night, we were really expecting quite a bit of a downdraft from the momentum on Friday due to the increased negative rhetoric that President Trump put towards China on Friday. And so I think right now the markets are going to continue to be very, very jittery. So I think investors need to be very opportunistic right now. And on up days like today, if you're overweight equities, I would actually look to take these up days and raise cash because as we well know, we're one tweet away from the market tanking 600 points or going up. And when you're in an environment like that where it's just so unpredictable what's going to happen on a day-to-day basis, again, I would take these up days as an opportunity to take some cash and put it on the sideline right now.
Is that what is on your horizon, Eddie? A big market tank?
It's really going to be dependent upon what happens with trade. I know I sound like a broken record, but I really don't think the market is going to tank in regards to trade. And the reason why I say that is I do firmly believe that this president, one thing that President Trump has shown is he does look at the stock market as his report card on how well he's doing. He will try to do everything he can, I believe, to keep the market propped up. So I don't think that he will let trade get so out of hand that the market tanks because his chances of getting reelected in that scenario, I think, goes down quite a bit. So I think from an administration perspective, one thing that should give the investors some calm is that this administration does not want the market to tank. But with all that being said, we've had a heck of a run, and it's just prudent when you've had these types of gains over the last several years in an uncertain time period like this is to raise cash.
Eddie, how do you know what to trust in terms of trade, or not trade policy, but in terms of trade rhetoric coming from the White House and coming from President Trump's tweets? How do you know what is going to move the market and what's not going to move the market?
Well, in regards to what to trust, I don't think an investor truly knows, right? Because you can hear two different sides on one given day. And again, when the market is vulnerable to those tweets and rhetoric that come from everybody out there in regards to trade is what makes this market very unnerving and makes the market as volatile. I mean, look at the VIX this month. I think what we're seeing in August is going to stay at least for the next couple of months. Now, if the tariffs do go into effect, I think you can continue to see more downward pressure on the market because then you're going to start to have the consumer get concerned. And that's what's keeping our economy strong right now is the consumer. If the consumer gets concerned and stops spending, then we're in trouble.
Okay, so Eddie, in regards to the consumer, right, we've heard a lot of differing data. The consumer, by some data measures, does seem to be in a pretty good place. What are you looking at to measure the strength of the consumer?
Well, when a lot of the consumer numbers from Walmart and Target, of course, were good, the CEO, Bank of America, kind of made some stances in regards to how strong the consumer is. I think one thing we need to look at right now is consumer confidence. If we start to see consumer confidence go down in the fourth quarter, then that's a time that I think to start to get even a little bit concerned. Because let's face it, ever since the yield curve inverted, we've been hearing nothing but recession, recession, recession talk. And the last thing we want to do is to actually talk our way into a recession, but it could happen. And so that's the thing that we're watching right now from a consumer is consumer confidence. Now, right now, the consumer is strong. I agree with you 100%. But as we know, things can change on a dime.
And how quickly, Eddie, you say things can change on a dime. How quickly could that come?
It's like, one of these things, again, which is why we're being a little bit more prudent and being defensive, is we don't know. If we knew how quickly it could move, we could position things right now. I just think right now, after the run we've had with the inversion of the yield curve, with the China trade talks, with the Fed possibly not raising rates in September when the market is completely pricing it in, it's just prudent to be a little bit more cautious right now heading into this uncertain time period.
What effect does this have on executives at companies, CFOs, CEOs, who want to make investment decisions about the rest of 2019 and even looking as far to 2020 and 2021? What type of change does this happen because of the uncertainty there?
Well, I think, and you're seeing it in CapEx spending, it's not as strong as we would like to see it. And the reason why is because of that uncertainty. Put yourself in the seat of a CEO. If you don't know what the tariffs are going to be or how long this trade war escalates, why would you make any type of substantial investment right now? I wouldn't. And so that's why you're seeing them take a much more cautious stance. And the longer this trade uncertainty lasts, the longer you're going to see these capex numbers weaken. And again, the recession that is happening overseas, our concern is in this global economy is eventually it will spill over to us if this trade uncertainty continues and our businesses don't start reinvesting.
Is there anyone that benefits from the volatility that we've seen in the market since this trade war started, Eddie?
Probably traders, people that like to trade the market on a day to day probably enjoy this volatility. But let's face it, most people watching here are everyday people like ourselves that are trying to save for their retirement. They're not day traders. They're trying to find a long-term investment strategy to help meet their needs. And the unfortunate thing for them is they get caught up in a lot of the emotion of the headline risks. Put yourself in a position of someone that's getting ready to retire and all you hear about is a potential recession. They're probably going to make an emotional decision that may hurt them financially. But at the same time, you can't blame them to be concerned when they have their entire future weighing on what the market's going to do and how their portfolio is. So my concern is with those families trying to get to where they need to be financially, not necessarily the big traders that enjoy this volatility.
Okay, Eddie Ghabour, we got to leave it there. Eddie's the co-owner of Key Advisors Group. It's good to see you.
Thanks, Eddie.
Thank you so much. Have a great day.
You too.